Hello guys, it's Stock Trader Max here and welcome back to Daily Market Movements, where today we're going to be discussing the broad market and where it may be heading within the next 24 to 48 hours. Firstly, I'd like to apologise for the lack of videos over the past 2 weeks. I went on my very first cruise holiday and unfortunately there was a lot of tropical storms due to it being hurricane season, etc. And I was stuck on the ship in the middle of the Atlantic Ocean with no Wi-Fi for just over a week. So really sorry if I've been very silent over the past week or so, but I'm now back in Dubai at my office and business will continue as per usual. So yeah, we're back in business. But let's get started here with the economic calendar. Let's just have a look at what's to come this week. We have a very quiet week. We're kind of in like this blackout time period now where we don't get too much economic data apart from Thursday this week where we get the core retail sales. So that will give us a good indication as to how the consumer is performing. And I think the most important data that we're going to get on Thursday, of course, is the initial jobless claims. Obviously, last week we had a pretty high reading of 258k, which come in stronger than expected. This week, that is also expected to be forecasted at around 241k. So I think it's important that we start to see a decline again back in those initial jobless claims. But, you know, retail sales, jobless claims on Thursday. But apart from that, that's it really this week. And it just allows the market to kind of drift in either direction. But let's get started here with the S&P 500. It's still my opinion that we're on our way to go and try and to achieve 6,000. I think this is a pretty reasonable target going into the end of year. Obviously, I just need to move this this 5 wave slightly towards the right. But yeah, 6,000 would likely mark the top of wave 3. That's an area where I would expect us to see some stalling out, where we would probably drop back down towards around 5,850, which will be the 4th wave before continuing in the first quarter of 2025 to form the 5th wave, which should take us to around 6,300. So very bullish here for the S&P 500. Moving over to the Nasdaq 100, this market still has to play catch up to the S&P 500 and the Dow Jones 30. We're still trading below the all-time high, so this is a very attractive trade at present. We're starting to see technology play catch up to the financials, etc., which have been outperforming in the past couple of weeks. But you know, we're still 2.1% off the all-time high here for the Nasdaq 100, and it is my expectation that we trade up towards 21,650, which would mark the top of the 3rd wave before seeing some stalling out down towards 20,000, which makes a lot of sense because that would just be a back test of the previous swing high that we formed back on the 11th of July before seeing our 5th wave, which should likely take us up towards 23,500 in the first quarter of 2025. Moving over to the Dow Jones 30, the Dow continues to trend higher. Obviously, we have seen an outperformance in financials. And this is obviously helping this index because it has very low exposure to technology. And the past couple of weeks we have seen, or the past month or so, we have seen some weakening in performance of some of those biggest technology stocks. So that's where the Dow Jones 30 has really managed to capitalize on that and has been leading the market higher. I think just a few other charts that we just need to pay very close attention to is the dollar. The dollar obviously bouncing recently. This is due to tensions in the Middle East. And of course, we're seeing the yields move significantly higher. We're seeing the 10-year back above 4%. So that obviously we do need to keep a very close eye on moving forwards. But ultimately, I do expect us to see a decline back down towards the 100 mark, and then obviously we will probably breach below that to go and achieve 97. Last chart I just want to analyze quickly today is Bitcoin. Bitcoin is having a significant move higher today, up around 3%, trading at 64,800. I do expect this to go and break above the swing high that we formed just last week at around 66,300. The area to watch here is around 67,500. If we can break out of this consolidation that we've been forming in since Bitcoin hit its all-time high back in March 2024 at around 73,500-ish. That would be very encouraging, and you'll see Bitcoin along with Bitcoin proxies start to surge significantly higher. I'm much more focused on the Bitcoin and Bitcoin proxies going into end of year versus let's call it traditional stocks such as Nvidia, Apple, Microsoft, etc. And that's just due to the seasonal trends that you do tend to see around the election, and obviously with it being a halving year. So I'm super bullish on Bitcoin and Bitcoin proxies, more so than traditional US stocks as we go into the end of 2024 and into the start of 2025. But all in all, I do expect the markets to be a little bit choppy as we head into the US elections. Obviously, we have Trump that's looking to be a clear winner at present. That's according to the polls that I'm seeing, with a 55% chance of winning versus Kamala Harris at around a 45% chance. So we've seen that separate over the past couple of days and weeks. So we could still see some choppiness as as we head into the US election. But once we get, the winner, that will obviously offer investors certainty moving forward. And I do expect us to see a split house, which is very bullish for investors and stock traders because it gives us 2 years of certainty where either party will likely be able to put anything into place. So I do like the backdrop moving into end of year and, of course, moving into 2025. It might not be as bullish as what we've seen over the past 18 to 24 months, obviously with this bull market now being 2 years old, so the last 24 months, but I do expect us to continue drifting higher here in the stock market as well as the crypto market